Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. In July, President Trump signed the Genius Act. This landmark legislation is the first major law to regulate digital currencies and could lay the groundwork for more cryptocurrency payment options in the future. But what do investors need to know about the future of this new finance? Joining me to discuss is IBD business reporter Harrison Miller. Harrison, thanks so much for being here.
Thanks for having me.
So, Harrison, what does the Genius Act and other new potential crypto legislation mean for the evolution of cryptocurrencies?
Yeah, so these bills are a massive development for the digital asset industry here in the US and are really going to be what takes cryptocurrency mainstream in our financial system. For a long time, a lot of these market participants and crypto firms have either been held up by bureaucratic tape or waited on the sidelines because they weren't quite sure where their products or services would fall. So you had all these disputes with the SEC, saying what is a security, what isn't a security. So now this legislation is finally defining these rules of the road and really letting these companies come out in full force. So a lot of the analysts I've talked to have said it's almost like a floodgate opening moment for the industry where now these players can really come in and, interact with customers, launch the products that they want, and, start using cryptocurrencies in everyday services.
Absolutely. But just to be clear, the Genius Act only applies to stablecoins.
Exactly. So stable coins are a specific type of currency that are pegged to a US dollar or another currency. They're intended to keep one stable price to make it easier for these everyday payments. And they come with additional, consumer protections such as reserves that have to be fully backed and audited. And so what the Genius Act is going to do is start allowing for stablecoin payments in everyday use cases, whether that be checking out at the grocery store, or banks may start launching internal stablecoin services for different transactions, business to business or things of that nature.
And despite all these areas of coverage, are there still concerns with how these new pieces of legislation may leave too much room for banking and commerce to mix?
Yeah, there are some kinks in each of the bills that need to be worked out. I've heard some issues with the Genius Act where people have said that panic selling of stablecoins could lead to a decline in value for treasuries if stablecoin issuers have to start selling off those reserves backing the stablecoins. For the Clarity Act, there are some concerns around tokenizing assets on the blockchain and how that may be able to skirt securities laws. And other participants have said, well, if you tokenize these securities, you could pull liquidity away from the market. But Independent Community Bankers Association, which did have some issues with the Genius Act prior to its signing, said that Congress was willing to work with it to address some of these issues that they had. And so we'll likely see some of those changes implemented before the final signing of the Clarity Act or the anti CBDC bill.
And what's the long-term vision for stablecoin for use cases with credit card companies, banking, and even retail?
Yeah, so really the end goal is to just make stable coins a part of everyday payments and everyday finance. Someone that I spoke to at Anchorage Digital told me that they want stable coins to be so common that people may not even realize that they're using them. So, for a consumer perspective, if you're checking out at the store or online, that may end up looking just like another checkout option similar to Apple Pay or PayPal. Whereas banks will start incorporating stable coins for internal bank transfers or cross border transactions to reduce the transaction fees and lower the settlement speeds.
So, for old-fashioned people like me, my love of swiping or tapping my plastic, aka my credit card, is
Yeah.
probably gone by the wayside soon.
Well, the likes of Visa and MasterCard are rolling out stablecoin linked credit cards. So, you may just have a crypto backed card that you just pull out in your wallet.
Absolutely. All right. Tell me more. What other notable companies are already integrating stablecoin into their payment systems?
Well, so since it's still officially new, we're hearing a lot of background talks. The likes of Amazon and Walmart and even Expedia Group are reportedly exploring how they could either issue their own stablecoin or start integrating it to their payment systems. But when it comes to these non-banks launching stablecoins, there are a number of regulatory hoops that they'll have to go through. So they might turn to another company like Paxos to issue the stablecoin for them. They may, form a consortium that will work together to launch a stablecoin, or they just may adopt a currently existing stablecoin like USDC or something like that. As far as the banks go, JP Morgan has launched a stablecoin like deposit token for internal bank transfers, and they're experimenting with that. But we've also seen reports that JP Morgan, Bank of America, and Wells Fargo are potentially looking at teaming up for their own stablecoin. So these are all, very early developments, but we're seeing a lot of big name players interested. So these guys will likely roll them out first, and then we'll start to see integration with smaller and mid-sized companies down the line.
And to that, what are the implications for the potential rise of stablecoin usage for investors and the market?
I'd say if you weren't interested in digital assets before, now's definitely the time to start paying attention to cryptocurrencies. They're going to change the way that banks and retailers operate and the ways that consumers interact with money. So you may see the changes on your personal finance level, the way you're spending your money. We'll also see the emergence of new players like stablecoin issuer Circle, which IPO'd in June. So new investment opportunities, new names to keep track of. But overall, I'd say there's a lot of momentum behind digital assets at the moment.
All right, Harrison. Well, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Thanks for watching IBD. We'll see you next time.